What if I told you the dream of owning a home just got further out of reach for millions of people? And it's not because you're lazy or not working hard enough, but because the housing market just flipped upside down in ways most people never saw coming. Imagine waking up one morning and realizing the same house you could have bought 3 years ago for a payment of $1,700 now costs you $2,600 every month. That's nearly $12,000 extra dollars every single year for the exact same 4 walls. WTF just happened to the housing market? Let's talk about it. The truth is the game has changed completely. And if you don't understand what's happening, you are going to get left behind. Interest rates are at highs we haven't seen in 2 decades. Builders aren't producing enough new homes. Hedge funds and Wall Street firms are buying up neighborhoods like monopoly boards. Regular buyers are getting priced out. Renters are stuck paying more every year. This is not a conspiracy theory. This is data. This is real life. And if you think the solution is to just work harder and save more, you're already playing the wrong game. Wealth Rage is here to give you the edge. Because the system is not built for you to win, it's built for you to quit. Think about this. Back in 2020, you could get a 30-year mortgage for under 3%. It was basically free money. At 3%, a $400,000 house had a payment of $1,700. Today, at 7%, that same house now costs $2,600 every month. That's almost $1,000 more just to borrow the same money. And here's the part that stings. Wages didn't jump $1,000 a month. Your paycheck didn't suddenly grow to keep up. So where do people make up the difference? They either don't buy at all or they rent longer. But here's where the plot twist comes in. When buyers drop out of the market, you'd expect prices to crash. Supply and demand, right? Wrong. Prices are not crashing in most cities. Why? Because supply is historically low. After the 2008 crash, builders slowed down for years. We're millions of homes short of what the country actually needs. On top of that, homeowners who locked in those sweet 3% mortgages, want to sell because they have to buy their next home at 7%. They're trapped. So fewer people list their homes, fewer homes hit the market, and the little supply that is left gets scooped up by investors with cash. Let that sink in. Regular families are struggling to qualify for a basic mortgage, while billion-dollar companies are buying entire neighborhoods in cash. They don't care about interest rates. They rent those houses back to you at a profit. You're not just competing with other families anymore. You're competing with Wall Street, and Wall Street doesn't lose. Now here's the kicker. Rents are also skyrocketing. In some cities, rents have gone up 15% in a single year. Austin, Texas is a perfect example. Average rent jumped from $1,200 to over $1,700 in just 3 years. That's nearly $6,000 extra dollars a year for the same apartment. Multiply that by millions of renters and you see why housing feels like quicksand. You're working, you're hustling, but the ground is pulling you down. So what do? Do you sit back and complain that the system is unfair? Or do you rage with money, flip the script, and learn how to play this game differently? Because here's the hard truth. No one is coming to save you. The government isn't building enough homes. The Fed isn't cutting rates to help you buy a house. Banks aren't giving out charity mortgages. You have to outsmart the system. Step 1 is survival. If you're renting, negotiate. Most people don't even try. A landlord would rather knock 50 or $100 off your rent than risk losing you. Offer to sign a longer lease. Offer to pay on autopilot. Show them you relow risk, and you'll be shocked how flexible they become when vacancy costs them money. Step 2 is leverage your credit. Every 20 points you raise your score can shave thousands off the cost of a loan. People treat credit like an afterthought, but it's literally the lever that makes banks charge you more or less. Fix errors, pay down revolving debt, keep utilization low. It's boring, it's not flashy, but it changes your entire financial future. Step 3 is creativity. House hacking is not just a buzzword. It's how normal people survive this market. Buy a duplex, rent out one side, live in the other. Or even simpler, rent a spare room on Airbnb. I've seen nurses, teachers, young couples cut their mortgage in half by doing this. One spare room on Airbnb can bring in $500 to $1,000 a month in the right city. That's the difference between drowning and staying afloat. Step 4 is invest smart. If you're waiting for the perfect time to buy, you'll wait forever. But that doesn't mean you rush blindly into the market. Look for properties that actually cash flow. Even if you make $200 profit a month, that's $2,400 a year. Stack a few of those and suddenly you're not fighting to survive, you're building wealth. Step 5 is get exposure even if you can't buy a house right now. Real estate investment trusts or REITs let you buy a piece of real estate portfolios for as little as $100. Apps like Fundrise or Public make it easy. No, it's not the same as owning a house. But it gets your money moving, it builds discipline, and it gives you a slice of the action instead of sitting on the sidelines. And here's a reality check. Not everyone is supposed to own a house today. That's okay. Renting doesn't make you a failure. What makes you fail is having no plan, no strategy, no leverage. Sarah, a 29-year-old nurse, wanted to buy a home but couldn't afford it after rates spiked. Instead of giving up, she started renting her spare bedroom on Airbnb. That covers $900 of her mortgage. On the flip side, James in Phoenix panicked, bought a house at the top with no strategy, and now his payment eats 55% of his income. Which life would you rather live? Strategy beats FOMO every single time. The future isn't about waiting for cheap houses to magically appear. That's not happening. We're not going back to 2010 prices. Supply is too low, demand is too high. Rates may come down a little, but not enough to make housing cheap again. The future belongs to people who are financially educated, creative, and relentless. People who build side hustles to increase income. People who use AI to analyze markets, to research neighborhoods, to find opportunities before anyone else. People who stop complaining and start strategizing. So ask yourself, where do you want to be in 3 years? Still renting the same place at $1,000 more per month? Or living in a home that pays you because you house hacked and outsmarted the system? Still waiting for a crash that never comes? Or collecting passive income because you invested in REITs while everyone else sat paralyzed? This is wealth rage. We don't accept the story that everything is too expensive. We rage against it by finding opportunities in the chaos. The housing market isn't broken for everyone, it's broken for those who don't adapt. Winners adapt. Losers complain. Which one are you going to be? So here's the challenge. If you got value from this breakdown, don't just nod your head and click away. Take one action today. Check your credit score. Run the numbers on house hacking. Download an app like Fundrise. Message your landlord about renewing at a better rate. Do one thing that shifts your position in this game. Momentum compounds. Small actions create big results. And before you go, smash that like button, subscribe to Wealth Rage, and comment below. Are you buying, renting, or investing right now? I want to see where the Wealth Rage family stands. The links in the description are packed with resources to help you raise your credit, start a side hustle, and learn to invest smarter. Don't miss out. This is not the time to be passive. This is the time to be raging with your money. Stay sharp, stay relentless, and I'll see you in the next one.